Futures contracts, like other derivatives, initially originated in the traditional financial market. Their trading was quite convenient there because it was possible for users to earn on the difference in the value of assets, but at the same time, they did not have to worry about their physical storage, usage, and so on. But despite the fact that the cryptocurrency is just a code encrypted into the network and it is not difficult to transfer coins from one wallet to another, futures have gained great popularity among crypto traders. And all that can be explained by the fact that in spite of being risky, trading for digital assets contracts is also more convenient, flexible and profitable at the same time compared to spot trading. And nowadays, Binance Futures is one of the most popular platforms for trading cryptocurrency contracts. I have already uploaded a video on this platform earlier onto my channel, so in today's video I will not go over the basics again, but I will tell you about several new features on Binance Futures that have appeared relatively recently, namely BUSD margined futures and multi-assets mode. Let's start with BUSD margined futures. As their name implies, these are futures contracts, the margin for which is collateralized by the BUSD stablecoin. If you have previously traded on Binance USDT margin futures, then you will not need to study something new to switch to the usage of BUSD margined. And here, many people will probably ask why they need to switch from the usual USDT contracts to the same BUSD futures. In fact, such contracts have a number of advantages. Firstly, the BUSD stablecoin itself is more reliable than USDT. Despite the fact that USDT is the most popular stablecoin now, many users are starting to adopt its collateral. After all, Tether, the issuer of USDT, is not really prone to disclose information about its balance sheets and conduct audits of assets that are baked with their stablecoin. BUSD is the exact opposite in this regard. The issuers of BUSD, but what's more important, the BUSD stablecoin is regulated by the New York State Department of Financial Services, a fairly strict organization that sets very serious standards for asset regulation, and BUSD fully complies with these standards. In particular, third-party audit firms check the BUSD collateral, which is stored in fiat currencies and US treasuries every month. Thus, BUSD users can be 100% sure that their stablecoins have a stable connection with the dollar, and there won't be any situations like the one that happened with Terra USD. The second advantage of the BUSD margin is their profitability. Since BUSD is Binance's own stablecoin, it follows that they are trying to promote it through their exchange. That is why traders who trade BUSD margin futures pay lower commissions for transactions than USDT margin traders. First of all, let's look at the most standard Binance Futures commissions without considering various lowering coefficients. For USDT takers, the commission is 0.04%, and for BUSD takers, it amounts to 0.03%. USDT makers have a commission of 0.02%, whereas for BUSD makers, it is 0.012%. However, at higher levels, namely VIP, the difference in commissions becomes even more noticeable. Let's consider it on the example of makers. The minimum commission that can be achieved when trading USDT margin futures is 0 commission for the maker at the VIP 9 level, while the BUSD margin futures makers can get a negative commission value as fast as at the VIP 2 level. That is, having at least 100 BNB on the balance sheet and a monthly trading volume of $50 million. Traders of BUSD margin futures can get a rebate from each of their maker transaction amounting to 0.01%. It sounds to be very profitable, but the coolest thing is that when trading on Binance Futures, you will not need to convert each USDT into USD every time to make profitable deals. Binance has recently introduced a multi-assets mode. This feature allows you to get margin on futures in both USDT and BUSD without switching between different contracts. For example, if you have 500 BUSD and 500 USDT on the exchange balance, you can open a single position on BTC futures with a total margin of $1,000 without the need to divide it into two separate positions with different collateral for stable coins. You can try out this feature on Binance Futures right now. I will leave my referral registration link on the Binance exchange in the description below this video. If you create an account using this link, you will also support my channel. However, do not forget that cryptocurrency trading assumes a lot of risk, especially when it comes to trading futures with leverage. So if you have little experience in this regard, I advise you to try mock trading mode first, which can also be found on Binance Futures and allows you to conclude test transactions without using real funds.